All right, let's just a bit in the market, but let's talk to the experts on what SEBI is proposing to do via its consultation paper. So SEBI is proposing reforms under 4 key segments as far as the delisting of companies, listed companies is concerned. I mean, the basic primary thrust seems to be to try and make it easier for companies to delist. So instead of the reverse book build process, which has been in some cases a bit of a thorn for companies trying to delist, SEBI is now proposing in the consultation paper that there could be a fixed priced option as well. So that's one of the many things which SEBI is proposing. We had this SEBI chairman at the last press conference, chairperson at the last press conference saying that she doesn't want abhimanyus in the market, which basically means she doesn't want companies to be able to come to the market and not get out. I mean, if the companies do indeed want to get out via a delisting. Mr. Gupta is with us, former executive director at SEBI. We also have, he's also, of course, the managing director at Stakeholders Empowerment Services. Abhishek Dadoo is partner at Khaitan and Company. Gentlemen, great to have both of you here. Appreciate your time here on CNBC-TV18. Mr. Gupta, if I can begin by asking you, this is a consultation paper, there'll be feedback sought and then rules will be published. But does this, I mean, if you've gone through this, does it make it easier, the process of delisting from a
because I was part of the subcommittee, so I know each and every aspect of it. See, the idea was very simply that into the data of delisting offers and found that there could be situations where the market's expectation and the company's expectation were not meeting because of certain regulations, and companies were not able to do something better. So based on that, it was decided that why don't we allow a counter offer in a different manner? Because earlier counter offer was only possible if the price was not liked by the acquirer, but the 90% plus shares were tendered. So here was a situation where even 90% shares were not tendered, but there was a possibility of counter offer. The reason were 2. Because in an initial delisting offer, generally the shareholders were having such a high expectation that the company is desperate to delist, so they will pay any price. So sometimes, I would say sometimes some investors were bidding at irrational prices. You would have seen that some 20,000 rupees was also bid in some offer, something like this. So in order, the table is given in the consultation paper that based on promoter shareholding and public shareholding, what is the minimum that to bring some sort of a semblance to the process, let us calculate the volume weighted average of the bids that up to 90%, more than 90% has come, the calculation happens till 90%. If less than 90% has come, calculation happens at up to the entire bid that is received. So this is one way where it is trying to facilitate. How much it will be successful, only the market and time will tell. And secondly, I would say that no regulations are final, because every time when a regulations are put to marketplace, then some irritants happen or some problem happens or some cheating happens, whatever, everything happens. So regulations will go through a reform every time. So it is one more step towards making it easy.
Yeah. No, Mr. Gupta, does it shortchange investors? Because this is a process through which, there are some instances, absolutely agree with you, where there is, there are people bid irrationally, right? I mean, to try and force the company, and it just doesn't make sense. But was that found, as you said, I mean, a study was conducted, was that found predominantly to be the case? Because this was also, the reverse book bid was also a way for common shareholders, retail shareholders to find, to get, the maximum price available to them. And nothing wrong with that.
No, I agree. So what we are saying again, you understand that there is no shortchanging of the investor, because option is always coming where there is a price which has been discovered based on the demand and supply position in the first. Yes, it is only after 90% is reached then there will be a situation where either investor tender at that price or remain the listed price. Again, I am saying,
Got it.
and Abhishek will agree that there will be people in the market, there will be bankers in the market, there will be lawyers in the market who will try to suggest 100 different methods to the promoters to do something. If anything is noticed by SEBI, SEBI will certainly take a further corrective action and do further reform. So the idea is that neither side should be suffering. So there was a situation where one thought that promoters were not having various options. There was only one option. This is one more.
And I wanted to just also touch upon the what this would mean for, say, holding companies, because there is a special bit in these holding companies usually traded at a big discount, relative to the value of the investments that they own in listed or unlisted securities. Go on, Abhishek.
Thank you so much for having me, first of all. And I fully agree with Mr. Gupta. I think the fixed price delisting is bound to be a game changer in the current market. We've seen historically that the reverse book build, while it's a more democratic process, it ultimately tends to failure in the delisting because of unrealistic price expectations. So a fixed price delisting is bound to streamline the market a lot more. And like the SEBI chairman said, right, the option for you to come into the market should come with the option for you to exit the market. And that needs to be a realistic option. It shouldn't be one where you are effectively held at mercy by certain shareholders. Having said that, on the holding companies, again, I think it's a really progressive move by SEBI. Like you rightly said, the holding companies usually trade at a substantial discount because there is no perfect way to value the underlying securities. And the long-term objective is that these shares will be held by the holding companies. So a solution that SEBI has come up with there is to say that we don't follow the regular process, not of a reverse book build, nor of a fixed price delisting, because neither of these are bound to satisfy the public shareholders in a true price discovery method. Instead, they have proposed a method where the holding company is effectively able to pass on the underlying listed shares to the public shareholders, as well as the benefit of unlisted stock or real estate. It is quite common for a lot of these holding companies to not just have listed securities, but also have some amount of unlisted securities or real estate assets. So those can be monetized in the form of cash, and that is passed on to the public. And then the delisting effectively takes place by way of an NCLT order, which is a tribunal process. So that makes the process a lot more streamlined in a way and enables a true exit.
Abhishek, just 30 seconds. You must have gotten a sense of feedback from companies and the ecosystem which works with corporates on matters like this. I mean, is the feedback positive? Just
it's very positive.
A strong poll.
I must tell you, this is something that the industry has been trying to battle for a very long time. It's a wonderful move. We are all looking forward to it coming into play, and I'm sure it's going to be immensely helpful for the whole industry, no doubt about it.
All right. Well, so it does simplify quite a bit from a corporate perspective, but we will get to hear, and the feedback comes into the consultation paper from others as well. I mean, shareholder associations, etc. Thanks very much, Mr. Gupta and Abhishek, for joining in. Great to speak with both of you here, and good chat. Thank you. Well.